please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
I have a reputation of being impatient in getting results. I know that. So are you.
You are a revolutionary leader, in the best sense of the word revolution.
We have imparted our shared impatience to the implementation of our earlier decisions.
My wife and I are very happy that we're going to Bollywood. My friend Narendra, anytime you want to do a yoga class with me, it's a big stretch, but I'll be there. Thank you, my friend.
Well, that was Israel's Prime Minister Benjamin Netanyahu making his first visit to India. This is only the second visit by an Israeli Prime Minister and comes after a gap of 15 years. Former Prime Minister Ariel Sharon had visited India in 2013. Two nations signed about 9 memorandums of understanding across various fields to further strengthen bilateral relations. These include MOUs on cybersecurity cooperation, oil and gas sector between petroleum and energy ministries, among others. Good evening. Thanks for joining us on What's Hot. Straight to the top story this evening. India's trade deficit has hit a 37-month high of $14.88 billion in December. Exports grew at over 12% to $27 billion. However, imports outpacing that growth, surging 21% to about $42 billion. What is most worrying about the trade numbers is on several parameters. Trade deficit, gold imports and crude imports, the numbers are looking eerily similar to the pre-taper tantrum days. Lata joins us now with more. So Lata, gold imports largely responsible for the kind of trade deficit we're seeing?
Well, a bit of it, partly responsible, but there have been other reasons as well. This $14.88 billion trade deficit is worrying. We did see one spike to $16 billion in November of 2014, but that looks like a freak because before and after we were at, 10 billion and 13 billion. We have never gone beyond that, but in the pre-taper tantrum days, we were averaging 14 to 17 billion. It is an unsustainable number for us monthly, unless we get $3 or $4 billion of FII or FDI inflows. We cannot sustain a trade deficit of 14 billion. We can manage up to 12 with 12 billion deficit. Beyond that, we are risking, we are at the mercy of foreign flows, portfolio flows. The second, similarity, gold imports had fallen to about, $1 billion, $2 billion in the years of 2014, 2015 per month. Now, for the last 3 months, they are averaging about 3 billion and more. This time it has come in at 3.4 billion. This means something like 73, 74 tons of gold being imported, and that will mean an annual run rate of 900 tons, exactly the number which was imported in the 2012 days. Again, very eerie. Crude, it's easy. Crude prices have risen, and of course, there is a pickup in industrialization, so that growth also by about 35%. $10 billion is a number we should be worried about. I just want to point out to one or two other worrying trends. For all the exports growing at 12%, ready-made garments are contracting by 8%. This is a employment-heavy industry. So are gems and jewelry. 2.4% at a time when gold imports are rising, doubling year on year, and even pearls and semi-precious stones are rising. But gems and jewelry not doing. Again, it's an employment-heavy industry. Man-made yarn, again, employment-heavy industry, not doing anything like other exports, just at 6%. Among imports, the worrying thing, of course, is gold and crude. But even electronics and pharma have shown some increasing imports, which is a bit worrying. But we have some experts on that, Shireen?
Yes, we do. Lata, Soumyakanti Ghosh of SBI and Aditi Nair, Principal Economist at ICRA, with us. Lata, hang in there as well. Soumya, let me come to you first. 37-month high, that's the picture as far as the trade deficit is concerned. Lata and I were just discussing the internals largely on account of gold as well as crude imports. Would you be concerned with this number, Soumya?
No, I hope that this number is a one-off number, but I would like to see that the export growth rate at 12% actually goes higher, because this month's number, apart from the gold imports, which Lata was pointing, is also a fact that it's also the crude imports. If you look into the oil imports, they have also soared, and that's basically the price impact. And there is another worrying factor which has been continuing for the last couple of months is the electronic imports. So I think this is some of the factors which are point of concern, and the contraction in apparel exports is actually a point of concern, because if you look into the US data, Office of Textile and Apparel of other countries, they are actually gaining in market share in the last couple of months. And since apparel exports is actually a price sensitive export, is mostly price sensitive, and losing the market share in apparel, it's a point of concern. So my hope is that the export growth picks up maybe beyond 12% so as to negate any adverse impact on the import growth. Otherwise, the numbers could look a little bit worry in the next 1 or 2 months.
Yeah, I take your point, Shaumya. Aditi, you know, our imports are showing a steep growth, largely because of commodity prices rising. Shaumya pointed to crude. If you run through the list, then you know there is non-ferrous metals, steel, not so much steel, but more non-ferrous metals, chemicals, plastics, all of them, paper, all rising because the price of the commodity has gone up. But we don't seem to be participating in the global growth story as far as exports are concerned.
Absolutely, Lata. I think, you know, just going back to what you guys have been saying on the import side, 80% of the increase in imports has come in from crude and gold, as you mentioned, but also the pearls and semi-precious stones. And on the crude side, definitely the price impact is there, but when we kind of back calculate and look at what has happened with volumes, the volume growth has spiked so much in December that I don't think that that's a sustainable trend which will continue over the next quarter. So at least on that point, I'm hopeful that even though prices are likely to stay elevated, we will not get this kind of volume growth coming in over the next quarter. On exports, the worry that I have is that we've seen a very broad-based slowdown in export growth. All of our major export-oriented sectors are showing a slowdown in growth in December compared to what was posted in November, and it's not just a one-off or one sector that's dragging it down, but it's very broad-based. Textiles, as you said, also gems and jewelry, a lot of the electronic and engineering goods sectors as well. So I think that's a worry. Seasonally, Q4 should be a smaller trade deficit. I think, you know, we can pin some hope on a seasonal correction coming in, and gold imports, I certainly don't expect will continue at this pace in Q4.
Well, one hopes so, because it is third month in a row that we have got a gold import number of over $3 billion, which would be something like 72, 73 tons. That's a bit worrying. But Shaumya, we need not worry too much, you think, because anyway the dollar is on a weak mode. So tomorrow maybe the rupee will depreciate, but not by a great deal. What's your sense on the impact on the exchange rate?
See, in terms of the, yes, you are correct in the sense that the dollar is, given the trends in dollar, but I am not so much hopeful of an rupee weakening very soon, because I think the interest rates are likely, the Indian contracts are likely to remain elevated. So from that point of view, I think the capital inflows will remain strong, and that will push up the exchange rate. My only point of worry is that we participate in the global growth story, because if you look into the data of the global exports and Indian exports, and if you plot them over the period 2004-2008, you will find that in the times of when the global exports were actually growing at around, say, maybe 10 to 20%, Indian exports were growing at 40%. So that's actually made the difference to the growth numbers in those days. So until and unless the export growth materially picks up, I think there will be some problem with the trade deficit.
Fair point. Well, we'll have to leave it at that. Shaumya and Aditi, thank you very much for joining us. Shireen, for me, the worry is that this is not looking like self-correcting. If the rupee were to depreciate, then automatically imports get expensive and you would import less of certain things. But because of the weakness in the global dollar flows and the continued flows of some kind of, dollars or foreign flows, the rupee is not depreciating much. So there is no self-correcting mechanism. And a one-shot correction should not happen. That can be debilitating.
And the export story that we were talking about, Lata, and especially on the textile side, the ready-made garment, the apparel side, I think that is going to be a big cause for concern and worry. I mean, we're talking about creating jobs, and these are large employment-generating, labor-intensive sectors where India is losing global market share. So that's going to be a cause for concern. Lata, thanks very much for joining us. We'll take a break, but when we return, come the 18th of January, the GST Council may modify the returns process for GST. That and more when we get back. CNBC TV18 exclusive news break. Well, trial run for the e-way bill will kickstart nationwide tomorrow. Remember, the GST Council has decided to implement the e-way bill system from the 1st of February. In fact, the GST network has informed transporters that e-way bill will become mandatory for interstate movement of goods from the 1st of February. Joining us now to discuss the e-way bill rollout plan and the plan to consolidate possibly the GST returns, we've got with us two special guests, the Finance Minister of Kerala, Thomas Isaac, and the GST Council member from Goa, Movin Godinho. Gentlemen, appreciate you joining us. Ms. Isaac, let me start by asking you, when we last spoke, you said that the state was ready for the trial run, which kicks off tomorrow for the e-way bill rollout. All set to go, sir?
Yes, we have announced this to the press, and we are encouraging we have some trial runs already. We are encouraging all the traders to start uploading the e-way bills from tomorrow. But we are not thinking of taking any punitive action in case somebody doesn't. But we'll be warning them. But definitely, we are going to be strict from 1st of February.
Okay, so you're not thinking of taking any punitive action for now, but you believe that traders will start to comply with the e-way bill mechanism. Can you take us through what has been done, sir? What measures have been put in place to facilitate that people do, in fact, move to the e-way bill system from tomorrow?
So we have had a fairly long meeting of our GST State Council, the GST Facilitation Committee, and similar meetings have been held at the district levels also. And there are helped us to respond to the queries by the merchants. There is going to be some problems and confusion, but there will be teething problems. Kerala will be fully ready by the beginning.
What problems and confusion are you expecting, sir?
Even uploading this, I have heard many traders saying it is very complicated and so on. Well, that is before they started uploading it. Let them upload it and see for themselves.
Okay. Mr. Godinho, all set in Goa, sir, for the trial run tomorrow?
Yeah, the trial run will take place, as you say. As you know, this will take some time ultimately to sink in the traders. Uploading is always going to be an issue like it happened earlier. That's why very consciously we have decided that from the 16th to the end of the month is going to be a trial run, and then from 1st of Feb we have made it compulsory. So that way we expect things to smoothen out over 15 days time. Whatever problems that are being faced, we can try to solve them and see and make the system even more smoother, so that the e-way bill system, which was envisaged right in the beginning, and we are implementing it now. So at least now it really starts working well from the 1st of February, because with the hope that whatever leakages are there, an increase in the overall collection, all that is what we are looking at.
Okay. Mr. Godinho, let me also ask you this, sir. We had talked about how the returns process is likely to be made simpler. We understand that there are a few options that will be presented to the GST Council. One, of course, will be possibly converging all three forms, GSTR 1, 2 and 3 into one. But it would also then require a significant overhaul of the IT system. What is your take on that, sir? How feasible or how viable is that?
Certainly, it is there on the table for the 18th council meeting. And as I said earlier also, while it would be ideal to sort of integrate all the three forms and make it even more simpler. But it is at the same time, I would say, it is not that simple. There are things to be still sorted out, and ultimately everybody has to be on board. The consensus has to be there amongst the members. And though it would be ideal to have it operational and make it simpler as fast as possible, we are trying to evolve the whole thing and decide on once for all on the 18th. So 18th, I'll be able to tell you more. I can't tell you exactly what are the opinions expressed, because then I would be preempting certain things.
I understand. No, I understand. So, Thomas Isaac, sir, let me end by asking you, would you be in support, sir, of converging the three forms into one? Is that something that you would support?
My tentative response is no. Because this much to upload just one form. And then it is the computer network to populate the form 2, from which the form 3 is a derivative. Now, this brings in some very important checks and balances, matching the returns. Now, this was not possible because this IT backbone was not ready. So let's give the system on which about 2 years of energy has been spent. Let us try it out and see if it works or not before we start jabbing the gun. So I would prefer to see it given a fair trial.
Okay. All right. You're in the camp that believes that the current system should be given a fair trial. Mr. Godino in the camp that believes that we should move towards convergence. We'll know on the 18th of January which way the GST Council does decide to vote on this. But Mr. Godino and Thomas Isaac, appreciate you joining us here with your take on the nationwide trial run for the e-way bill, which kickstarts tomorrow, and the possibility of converging the GSTR returns. Our colleague Timsy Jaipuria has been tracking that story. So Timsy, you just heard what the two finance ministers have had to say, and these are the options that the GST Council will be presented with.
Yes, that's right. The GST Council will be put forward. The officers have actually now chalked down these options, and they will now put it forward for the Council to take a formal nod on it, whether they decide to converge all the three forms into one, or they just decide to continue with the current system and merge just the GSTR 2 and 3 and keep one as it is something that we need to see. But yes, to merge and to converge the GSTR 2 and 3 would also need system overhauling, as I mentioned, and very clearly GSTN and the software and the IT backbone has to be very robust to deal with this situation. And yes, not to forget, SGST and CGST laws would also need amendments. So government will have to prepare with a lot of modification when it comes to the IT system, a lot of amendments when it comes to the laws, before taking a call on whether they should actually merge the three forms into one, they should merge two forms only, that is GSTR 2 and 3, or continue with this current system of GSTR 3B as a simplified version, and 1, 2 and 3 to be filled up as and when required. So we need to wait and watch.
Yes, we will be waiting and watching, and you will be tracking that story. Timsy, appreciate you joining us. With that, it is time for us to wrap up this edition of What's Hot. Don't go anywhere. What's Hot ends here, but the action on Dalal Street, where we saw the Sensex and the Nifty post record closing highs yet again. Market action when we return, and I'll see you again in 30 minutes on India Business Hour.